The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Steve Rhodes. I was going to go through the 11 a.m. update, but we're just going to skip everything at this stage. But this is the December 12th issue of today's Trader's Edge show. It's a magnificent Monday show. Had been under the weather, doing pretty well right now, just dealing with a real nasty throat issue. So we're going to try to do my best. You won't hear as much energy out there as you normally do, but just do my best to try to get through this hour out here. But that means I still want to hear from you. So you can give us a call, 877-927-6648. And if you can't call in, but you'd still like me to take a look at something for you, just go ahead and send me an email. Now, you send that to steve@tfnn.com. And inside the subject heading, just to make it easier for me to pick out your email from most of the junk that I get, just put radio show question in that subject heading. Of course, if you're inside the Tiger's Den, well, any and every ping will do. So let's go ahead and get this show started. This is, of course, Magnificent Monday. This is Tiger Financial News Network. And right now we got all the U.S. indices trading to the upside. All the U.S. indices, that is. Dow's up 291, S&P 21, NASDAQ 125, Russell's up 14, semis are up 12, trannies are up big. They're up 1 8/10%, nearly 2% to the upside, $247 there. Gold's off $9, silver's down 30 cents. U.S. dollar index is up at least 311 ticks. I do have a 10-minute delay there. Light sweet crude, nice day, finding support at the bottom of the profile. Trading up 278, 73.81 is a change. Natural gas is up 49 cents, nearly an 8% move to the upside. Gapped up, looks like it wants higher price. And the 30 Treasury is up 4 ticks, trading out at 130.01. Now, lead the charge, dollar-wise to the upside. You've got Coupa Software up $16 and change. That's 28%. Paycom Software, $15 and change. Horizon Therapeutics, $14. Now that's based upon a buyout out there, I believe, as well. And you've got ServiceNow up $13. The downside is Restoration Hardware off 21. Mercado Libre is off 15. Regeneron's off 11. And Shockwave Medical is down 11. That's about 4.5% to the downside. But let's do this because I want to go over what you want to go over. We've got our first caller, and it is John in Philly. John, thanks for calling. Thanks for holding. How are you doing on Magnificent Monday?
Well, Steve, I'm doing excellent, and I'm here to be your temporary wingman.
Perfect. I love it. I'll take it. You could be my wingman the rest of the day.
With as much as you do for us, least I can do is support you when you're not 100%.
Well, thank you. I appreciate that. So you want to talk about or take a look at the S&P. I know you want to take a look at the S&P, I believe. Tell the folks what you're doing. And take it from here, wingman.
Yeah, no, why don't you set the stage and just recap your key highlights for the S&P or the E-mini S&P futures?
Well, the highlights that I would share with you this morning would be the following, because really there's a couple different things, specifically with regard to the S&P 500. In the first place that I would start here, John, is in the upper right-hand corner right now, and what we'll take a look at. They are the TAS market breadth profiles out here. And what we have is we've got a bearish crossover for the 60-minute, the 240, and the daily. Weekly is still as bullish. Now, when I say that, folks, what I'm referring to is the number of instruments trading above the top of a profile. That's resistance. So if you're trading above resistance, that would be considered bullish. Versus those instruments trading below the bottom of a profile. If you trade below the bottom of the profile, which is support, that would in essence be bearish. So right now there's 105 instruments, John, with inside the S&P 500 trading above profile, or about 21%, whereas there's 31% trading below the bottom of the profile, 156. So the first thing I would say with regard to the health of the S&P 500 is it looks like it's getting ready to come down with the flu. I sort of know what that feels like out there. So that's the first thing that I would take a look at. The second thing that I would do, and again, this is just a market breadth a discussion at this moment, is if we take a look at the S&P 500, That's the top portion. Well, this is the New York Stock Exchange. My apology, top portion. But that's okay. That's fine. We can see that it is trading below its zero threshold line of its advanced decline oscillator. What that does, when you get below the zero line out there, that tells us that sellers are the ones that should have control of the marketplace. So from a market breadth standpoint, John, inside the S&P 500, it would appear that sellers are the ones with the upper hand out there. However, if they really do have the upper hand, the proof will come with a close below the bottom of the profile for the March 2023 S&P 5 ES mini futures contract. And that level to be watching out there, John, is 39.60. If price closes below that, I could easily see at least an A to B, a small A to B equals C to the downside, or maybe it turns into something worse than that. And where that would go with that A to B equals CD, we'd be using the high from Friday as the C point of a potential A to B equals CD to the downside. Folks, price going to have to close below 39.45.75 in order for that to even come to fruition. And if it did, then we'd get in a price target of 38.27, 37.73. So that's what those three charts show so far. Any questions about those charts, John, or any comments that you would add to it?
No, let me take over for you, Steve, for just a second.
Go right ahead.
Thank you on that. As I'm speaking to you and looking at your chart work in Tiger TV, I will just let you know in the Tiger's Den on Discord, I've just posted the E-mini S&P 2-hour chart. The chart that I just posted is, in fact, December contract. Just parenthetically, Steve, right now we're into this period in which the transition from lead contract is going December over to March.
Yes.
And currently, right now, March trades at a 32-point premium to December. And that is in part a function of the increased Fed funds rate, the discount rate within that levered contract. But I use that DEES contract and show a 2-hour chart image in the Tiger's Den just so people can see some relevant indicators going back at least a month.
Sure.
And what they'll see is something like the 200 period exponential moving average, a key indicator shared to us over the years by Basil Chapman, of course.
Yes.
And as importantly and interestingly, I'll reference two features that one can see on that chart. And that is a notation made last Wednesday, December 7th. And that was a full moon lunar cycle date brought to us courtesy of Norm Winsky on Larry Pesavento's show. But more interestingly, that was an unusual full moon in that the alignment of the heavenly bodies was such that the moon actually passed in front of Mars, an eclipse type of thing, if you will. And it was Winsky on Larry Pesavento's show a week or two ago had referenced that as being potentially much more significant than your standard lunar cycle. With all that said, what you will see on that chart is that abrupt sell-off Monday and Tuesday last week on the S&P.
Yes. Hey, John.
Hit a low
we're going to go to a hard. John, we're going to go to a hard break here. We're going to a hard break. Hold that thought, and we'll get right back to you as soon as we get back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We're on the line with John in Philly. We're taking a look at the 2-hour chart for the ES Mini. It's the December contract that John has pulled apart. In that first segment, he talked about the potential full moon bottom. I suppose, John, is that where you were headed to with that?
Indeed.
That formed out there. So go ahead and take it from here.
Yeah, Steve, let me continue with that. The point I'd make here on astrological cycles, I monitor them coming in the future, but make no particular guess as to what a market will do into such a time frame.
Sure.
And in fact, that sort of logic and thinking is articulated by Norm Winsky every time I hear him speak. But the market sold off abruptly, hit a low precisely on that full moon occulting Mars, that eclipse phenomenon, and we're higher since. So I just look at that and say, okay, fine. Does that prove anything going forward? Doesn't prove anything, but it is of interest that we made that extreme price on that date, and we haven't taken that out since. More interestingly, I will talk to your listeners about your discovery, Steve, back in 2013 of the apogee-perigee pivot tool. And I'll lead, or I will leave it to listeners to go back and study your description of that that tool. Suffice it to say, a new apogee pivot occurred last night, Sunday evening, while Globex Trade was open.
Yes.
And on the, and I'll use both the DECE, let's see, the DECE apogee, as I calculated, was 39.29. The March E-mini S&P apogee figure was 39.61. What I will observe here is that from last night's pivots, the market has rallied. And what I've learned as a trader using your tool, your discovery, Steve, is that as long as a market is moving higher and away from a pivot, I don't want to short it. I want to stay with the long side. if we reverse and come back and plow through that pivot, and once again, 39.61 on the March futures, 39.29 on the D futures, then I'd want to say, well, I certainly at a minimum would want to get out of long. So the application of your Perigee pivot tool is active right here, right now. And I thought that'd be worthwhile sharing on your show.
Yeah, so great. So thanks for bringing that up. I've got the charts up on my screen right now. Our numbers are off just a tad, but that's just because I wasn't feeling that great last night, and I just went ahead and got the 730 level. So it's off by $1 or $2, no big deal. Well, just want to shift gears for you for a second. So did you use that for light sweet crude? Which took out the apogee pivot point a couple hours ago, and Goldilocks. Since you're going to be my wingman, I'm going to use that to my benefit as much as I can. But the answer could be no. But since I just happen to have 4 charts up on my screen, the ESENQ, gold, and light sweet crude, has any of your trading been impacted by how price has dealt with that apogee pivot point?
Yeah, once again, as a very short-term trader, the rule that I found is very helpful is if we're moving through a pivot, and let's take the case of rising through a pivot, be on the long side. If anything, don't be on the short side. Likewise, if we've hit a pivot coming down and moving further lower, don't be long as a short-term trader.
Sure.
Be on the short side, if anything, as a short-term scalp trader.
Yeah, no, excellent review of the use of the tool and how to use it. If we so folks, you take a look at that on my chart out here, and the apogee, for those who aren't familiar with it, is the exact point in time when the moon is furthest from Earth. And for reasons that I have no clue, whether it's apogee or perigee would be when the moon during the lunar cycle is the closest to Earth out there. But for some reason, they act as John pointed out, pivot points, long or short pivot points, support or resistance levels out here. And so that's, in essence, what you're looking at on the screen that we're taking a look at. Does it work 100% of the time? No, I think John and I are still searching for that 100% of the time tool. Although I think we have come to the conclusion that there is no such tool. Right? It's just
no, Steve. No, don't say that. We're on the quest for the Holy Grail. You never know.
It is. Yeah, that is true. That is absolutely true. But if we do take a look at, you're absolutely right. If we do shift gears just for a moment, and I'll go back to, I've got the December contract still up on my screen. That way, at least it matches the conversation that we're having on the 2-hour time frame chart here. I'm just going to simply open that up. And here what you'll see, folks, is you'll see a Rhodes Momentum Indicator bottom. It was confirmed at 10 o'clock in the morning on December the 7th, and then it was reconfirmed with a nice little bullish hammer candle at $2,200 on the 7th. And then we saw a move higher. And that move higher took us into wave number 4. That's the letter D out here. Basil, when he's on, maybe I'm sure he'll say that I know he's doing Tom's show today, is that when he gets to wave number 4, the market can and usually does something else. And that's what on a 120-minute chart took place here, and price pulled back. I can't tell you why it pulled back to the area that it did at $2,200 last evening. But what we're dealing with right now, John, is price with inside a profile on the 2-hour time frame. And it is bullish in structure. In the center, which is where price is trading right now, and the center is at 39.57. We're trading at 39.57. The center is where both buyers and sellers believe that there is fair value, and that fair value is between the range of 39.44 and 39.83. So, John, my work has shown that and this would be a 2-hour bar, which is going to close at 12 noon, so in about 35 minutes. If price closes above the center because it's a bullish structured profile, it typically indicates that price will make a run up to the 39.83 level. That's where the sellers are located. I have no idea whether the sellers can overpower the buyers or it's the opposite way, but we do know where the next battle would be, assuming that price can clear this 39.57 level. John, before I look at any other time frame charts, since the 2-hour was where you were focused, does that provide you with some information that you need? Is there anything else that I can do for you on the 2 hours?
That's very relevant in real time and helpful. So, Steve, thank you. I would turn the direction of this conversation to my original intent in calling this morning, and that was to bring up the issue of cycles during the next 5 weeks on the S&P. Share some of the things that I recall and ask for your input. I will merely say I began using the website called SeasonX that I was introduced by you, which is just a helpful platform to pull up market information and past seasonal patterns and seasonal.
Hold that thought, John. Hold that thought, if you would be kind enough. And we'll be back in about 3 minutes, and we'll continue discussing the seasonal chart aspect using SeasonX. Steve Rhodes with TFNN. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We are taking a look right now at a seasonal chart here. We have got a discussion going with John and Philly. He's being really kind to help me out here and keep my speaking, my voice down as much as possible while I do with a pretty nasty sore throat. And so, John, I did pull up the S&P 500, the 72-year chart, seasonal chart, seasonal from the standpoint of midterm election cycles out there, which I see as a chart that you had posted in the den. So why don't you take it from here, if you would?
Indeed. In the Tigers Den, I did post that particular chart. Past 70-some years, midterm election years only.
Yes.
And what that shows on that seasonal cycle, or the seasonal tendency for the S&P 500, is a bottom, a decisive bottom mid-October,
Yeah.
A dynamic rally into December 1st. Bullseye thus far on both. And I mean bullseye.
Yeah.
Followed by an abrupt setback, another bullseye, followed by a rally into the end of the year. And that is the seasonal tendency for midterm election years. I'll further just share with you, we've had the true benefit on TFNN, Larry Pesavento on his show having a number of guests who are cycle students themselves. One was Larry Williams, and his cycles for the Dow S&P also called for a kind of a choppy market between Thanksgiving, early to mid-December, then a rally into the end of the year. And lastly, on Larry's show, he had Bill Meridian a couple of weeks back. And interestingly enough there, Meridian cycles, according to him, led you with the expectation of a pullback first 10 days of December, basing, and then a sharp rally December 15th into early January. Suffice it to say, a number of different and independent cycle studies point to strength, into the end of the year.
Right.
So I share that with you. None of that is my original work. I'm not good at that sort of stuff. I just do my best to put tools like those into practice as a trader.
Yes.
So I share those observations, and lastly ask you, Steve, if there's anything that you're looking at other than that seasonal study that gives you a clue of the S&P Dow direction the next, 3 to 5 weeks, from other studies or techniques that you have.
So I would say, so on that seasonal chart, let me just put that up here real quickly again, and just so people are looking at it. So what John was referring to, and take a look at some of the other cycle work that was out here, the red line, the red vertical line, folks, is where we're at today. And you can see that there's the signal of a bottom right here for December 15th. Now, sometimes you can't use this necessarily to the day. However, John has found that periodically it will hit right to the day. But it doesn't have to be right to the exact day. But here, this is showing us at post-December 15th, we should see a rally that lasts into the early part of January. Could go into January 3rd, 4th, 5th, something like that first week, typically. And so that's a seasonal chart that John was looking at. And these are provided by the folks at SeasonX. It covers all kinds of instruments. It's really pretty cool. I used to do all this work by myself, which means I used to have to download all kinds of historical data, put it in through a spreadsheet, try to get it lined up by week and day. And SeasonX made that really easy for us to be able to look at that. So you can take a look at that for all types of instruments out there. So if the market is going to rally, let's say from now forward or post December 15th forward out there, the one thing you'd want to be looking at for confirmation would be to see that spot volatility below that 50-day exponential moving average. So right now, it's just trading just above that. So if the seasonal cycle is going to kick in like it's showing, we should see that spot volatility get back below the 50-day, which is currently 24.21, and it's printing at 24.35. So that's one thing to be looking for. And then as another lagging type of an indicator out there, you'd love to see the market breadth for the ES Mini at least be positive for its a daily time frame. And right now, as we talked about earlier, it is not. So what other tools can we take a look at that are giving us some type of indication as to what's going on? I'm going to switch back to my black background charts and make it pretty simple for us, folks. We're going to look at the daily time frames for the 4 equity future contracts. So I'll get there here momentarily. Not there just yet. Here we go. And so right now, I'm going to get rid of that A to B equals CD pattern because it hasn't come to fruition for the ES Mini. What I would say, John, is that we're inside in the S&P or the ES Mini, we're inside a consolidation that ranges from 39.60 to 40.64. The resistance level out here over the last basic 4 or 5 trading sessions has been the 4,005 level. That's the center of a slightly bullish structured profile. So I would say that based upon just simply this chart pattern over the last 4 or 5 days, if price were able to close above 4,005, it would add to the idea that price should make a move to 40.64. If you take a look at the NQ out here, it is trading below the bottom of its profile. And if the markets are going to move higher, I would think that the NQ would kick in here. And so the NQ has been struggling to just simply get back inside its profile. In order to do that, folks, it would have to close above 11,784. If it could do that, then the next battle would be at 11,919. The Dow, as we can see, this formed about 2 weeks ago, formed a very narrow profile area. Now, when I say narrow, it goes from 33,687 to 34,163. That's pretty narrow. Yet price, if you take a look at the last 5 trading sessions, has really held both the top and the bottom. So I'd watch 34,163 to the top, John. If price is able to take that out, and in a bullish market, in this current environment, if we're talking about bullish market going at the end of the year, the Dow should easily be able to take that out. The Dow has performed much better than the other U.S. indices, so the Dow or the YM should be able to take out the 34,163 level. And lastly, the Russell 2000 earlier this morning got down, or late last night, got down and tested and rejected the bottom of its profile, and that's at the 1805 level. So as long as price holds that, the only breakdown that we're seeing out here is really the NQ. And for the NQ, as I'm sure you've noted, you could easily draw in just simply a sideways consolidation pattern that it is trading within. And so even though price is below its profile, so to speak here, price would really need to bust out this consolidation pattern to suggest that price is going to move lower. Those would be the other things that I would add. John, what say you?
Steve, that covers it more thoroughly than I think we've done in a while on a format this long. So, Steve, we appreciate you being the trooper that you are.
Well, thanks, John.
And
I appreciate your...
we'll take it one step at a time into year-end on the S&Ps.
Perfect. Hey, John, thanks so much for the call, and thanks so much for helping out. Much appreciated, and we'll look forward to doing that again. That is John in, you bet, that is John in Philly. We do have a couple of questions that have come in. Let's try to get to those. The first one coming in from Hector. And Hector says Exxon Mobil using November 8th as the high for an A to B equals CD. So let me see. I'm on the black background charts. Okay. Let me get over. I'll tell you what we're going to do. We're going to take a look at Exxon Mobil, and we'll get back from this break. And it may be an A to B equals CD that Hector is looking at. So you can do some of that work ahead of time. And we'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. You got the all the U.S. equity trading to the upside. Dow's up 258, about 8/10, 17 points for the S&P. 0.5%. The NDX is actually flat, just up 2 points out there. We're looking at the daily time frame chart for ExxonMobil. This is for Hector and Patty. And Hector's asking, is today's bull sash candle, which is what it is right now. We don't know what it is at 4 p.m. But the question is, today's bull sash candle a confirmation of a buy the D point? And the answer to that, my answer to that is no. And the reason is, Hector, is you picked out the proper swing point at the high, which was November 8th, 114.66 being the high. And then it makes a move lower, creates a little hammer candle on November 21st. That would be the B point. The problem with using then the C point, which is then the next high that forms on November 25th, it's basically 100% move of a move. It's a 99.25% retracement. You want that B to C leg to not be anything more than a 0.786 retracement. You can give it a tad of room above that, but once you do that, what you really have is more of a consolidation, if you will, than you would have an A to B equals CD. So today, and prices below a ExxonMobil, that is, a new profile that formed last week, which is above price. And that's a bearish directional, that's a bearish message out here. Tell us about overhead supply for ExxonMobil. So I can't use today's potential bullish reversal candle, Hector, as a confirmation of a buy the D point pattern out there. Now, we take a look at the other charts here for ExxonMobil. So we talked about that new profile. That's where the bottom is at 108.19, which again is above price, and the center is at 110, and the top is at 112. Let's just stay with the black background charts for a moment. What we can see out here is that on a weekly basis, things don't look too bad because price is simply trading above the top of its daily profile at 101.37. Price above the top of the monthly profile. But if we switch over and take a look at the white background charts, and that's what we're going to do right now, looking for any other signals. Here on the daily time frame, you see the TD9 count top that had formed out there on that November 8th high. Again, you can see that price is trading below a breakout level, 106 even Steven. It's still below that. Typically, when you crush one area of support, you go down and test the next level. On a daily time frame, that could take it down to 97.40. But before that would happen, you've got to get below 101.38. Old resistance that could become new support. So that's the 101.38 level. We are in wave number 7 on the monthly time frame chart. And as long as we don't see a higher high, that means a high above November, that'll confirm, and that suggests a pullback to 94.14. So that's what that looks like. Now, there was a question that came in earlier. Maybe it was Eddie or somebody like that. I apologize. I meant to write down the request, but I didn't. But the question was, while John and I were talking, if we could take a look at light sweet crude. So it kind of leads in or bleeds into the ExxonMobil conversation. So if we take a look at the daily time frame charts here, for light sweet crude. Let's open up the daily time frame right now. You're going to see that you also have a bull sash candle So the question is, does this confirm an A to B equals CD to the downside pattern? So there are several different A to B equals CD patterns that are out here in light sweet crude. So what I'm just going to I'm going to draw on the A to B line, or at least the first one. So here's A to B, and I'm going to just simply move that line over to the C point. And that C point is actually going to be the high from right here. We have to use the highest high after we get the B point, and that's the high from July 29th. So now you can see the 1-to-1 actually would get us down into the 66.97 level, and that's not what we have. So that's one. That would be so again, much like ExxonMobil out here, we don't have a completion. We have a bullish reversal candle, or it appears we do, but we don't have the completion of a pattern. That's what I'm looking for. Now that I mentioned that there's more than one A to B equals CD. The larger one that is in play out here for light sweet crude, and I'm looking at the February contract, takes us down to a TD9 count bottom that formed back in September. Now we take that line and move that over to then the high that forms after that and get some type of price projection. Got to move this chart. That takes us down into the, what the heck happened here? There we go. That takes us down into this 58 area. I believe it's 56 though, really, on the A to B equals CD patterns out here. And that doesn't have the monthly. Shoot. Let's do this. I'm going to just switch panels for a moment. Apology. Just a better look at the A to B equals CD pattern here for light sweet crude. So again, here is the February contract. And actually, I've even got the smaller A to B equals CD. That gets us to 65.85. Let me draw in the larger one, the one that we were just taking a look at, or trying to take a look at. So here's our A point. Our B point is out here back, it looks like maybe right around September 28th. And the C point is what I'm using for the A of the small, A to B equals CD. So that would give us a price projection, the larger one, down to about $58. So I've got one at 65. This is A to B equals CD patterns, and one at $58. And then I can't really do that next. So I guess the answer to the question again, ExxonMobil, not an A to B equals CD to the downside, not at least as far as the rules that Stevie follows out here. You do have support on a light sweet crude contract, the February contract. A support level out there is at 71.61, and resistance would be at 75.49. Now, as we go back to my other set of charts, just looking at the intraday periods, right? So whatever period you're looking at could give you a different message. But now as we take a look at the intraday charts out here, in the 5-hour time frame, you've got a nice Rhodes momentum indicator bottom. You're in a bull structured profile. This suggests we should expect to anticipate light sweet crude to rally even further. Rally to where? 74.80. 4-hour chart, Rhodes momentum indicator bottom. Price above its bullish structured center profile. Where should price rally to? 74.41. So we've got a 41 and an 80 on the 74 level as far as where price should go target. 2-hour chart, Rhodes momentum indicator bottom. Price is above a profile that formed at 10 o'clock this morning, or completed at 10 o'clock this morning, and it's already above that profile. That suggests higher price. I don't see anything to be worried about on the 60-minute chart. When we take a look at a 30-minute chart, this is if prices are going to make those moves to the higher highs, then what has to happen is that the TD9 count top that formed at 11:30, so just about 19 minutes ago, out here for light sweet crude, price is going to have to close above that high, and that high is at $74 even Steven. Now, what should take place here is we should see price move sideways to back. We should see that oscillator and change line on the 30-minute chart get tested. It's currently printed at 72.53. I'm not saying that's where the test takes place out there, but we do see a short-term signal to suggest that price should pull back. I would say a close below 73.30 would really then suggest that move back towards that 72.53 area out there. So that's what I see when I take a look at light sweet crude. And I think if it was Eddie or somebody, I hope that answered the questions with regard to light sweet crude, but it kind of puts light sweet crude together with ExxonMobil. If I take a quick peek out here, I'm on the white background charts, but John was kind enough to mention the Apogee pivot points out here. If I take a look at the light sweet crude, which I'm going to do as soon as I can find my chart out here. There we go. The Apogee pivot point that I've got is at 72.11. So price is above that. Suggests we should continue to get to those levels. But again, that TD9 count on the 30-minute has got to get negated out there. Otherwise, expect a small retracement before price tries to take out and move to those upper levels in the 74, 80-ish range out there. Steve Rhodes with TFNN. We'll be right back.
The TFNN Holiday Tiger Dollar Sale is running this week only. We've doubled our normal bonuses where you can now get up to a 40% bonus on your purchase, and all purchases also receive a TFNN Tiger Mug. Tiger Dollars are good for all TFNN newsletters, trading webinars, and services, so they're a great way to lock in added savings. Don't miss the TFNN Holiday Tiger Dollar Sale, which ends this Monday, December 12th. For all the details, visit the front page of TFNN.com today.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Sign up for Basil's live webinar airing this Thursday, December 15th. Basil Chapman will be hosting his first ever live trading webinar just in time for the holiday season. While Basil will focus on the S&P E-mini futures, other symbols from gold, crude oil to natural gas and more will be traded as appropriate. Basil will demonstrate specific Chapman wave techniques as well as answer questions live. Spots are limited and Basil goes live Thursday, December 15th. You don't want to miss it. To sign up, visit the front page of TFNN.com. TFNN, educating investors.
Welcome back, folks. Don't know if you caught last night's football game. One of the funniest comments that I think I've ever heard in watching a football game. And if you listen closely, for me, it was, hey, when you're not feeling well, humor is the best. Yeah, look, humor is the best anyways. But the call was an illegal procedure call, false start call. And when the ref came back, he said, then I recall if he's, false start or what have you, he said, false start on everyone other than the center. Of course, the center's the guy with the football who's got to start the whole thing. And I thought that was one of the most funny calls that I have heard a referee say. Anyways, back to the charts out here. Well, I've got about a minute left. And David in Panama City writes, and he'd like to take a look at Netflix. He's especially curious as to the monthly expiration on this Friday and what price is going to do. So we've got our 3 time frame charts up here for you to take a look at, David. The first thing on a monthly basis, what price also did was it got right up to that red oscillator and changed on and turned back down. And that was at the 322.36-ish area out there. So that's a negative sentiment. On a weekly chart, there's an A to B equals CD pattern to the upside. Today, we don't know what the weekly candle is going to look like, but right now, you would have a sell the D point pattern. On Friday, what Netflix did was it generated a bearish shooting star after moving higher and doing a less relative energy, and that set up a Rhodes Momentum Indicator top. You've got follow through today. Price is now back below the top of its daily profile and below its green oscillator and change line. This suggests that price should pull back to 295 to 301. Now, I don't know if it'll take that out, but that's where the next set of buyers are located, again, between 295 and 301. Now, what you've got here, David, is a 30-minute TD9 count bottom. And that completed at 11:30. That says if at 12 noon, less than 4 minutes from now, price closes below 310.27, near 310, well, you just went to 3, you're now just slightly below it. It's oscillating back and forth. But it closed below that, it's going to suggest lower price because you will have a negated TD9 count bottom. So I hope that helps you out. John in Philly, thank you so much for being so kind to really help me and rest that throat a bit. Folks, I'll do my best to be back with you tomorrow. Have a magnificent Monday. Stay tuned for great programming out there, and have a great day. We'll see you tomorrow. Take care.